What if I told you that there are legal ways to reduce your taxes, even down to zero? If you earn too much to contribute directly, use the backdoor Roth strategy. You get access to cash, the stocks continue to grow, and you owe no taxes. IRAs are a triple tax advantaged account. You contribute pre-tax, it grows tax-free, and withdrawals for medical expenses are also tax-free. Welcome to Smart Money Makers, where your money learns to work for you. If you're ready to grow, save, and invest smarter, you're in the right place. Let's dive in. How to legally pay zero taxes in the USA. Are you tired of paying a large chunk of your income to taxes? What if I told you that there are legal ways to reduce your taxes, even down to zero? In this video, we'll show you 5 smart and fully legal strategies the wealthy use to protect their income and grow their wealth. These methods aren't about cheating the system. They're about understanding and using it. 1. Start a business. Employees pay the most in taxes. Business owners, on the other hand, have access to dozens of legal deductions. Starting a side hustle, even part-time, qualifies you as a business. As a business, you can deduct expenses like your phone bill, internet, software subscriptions, travel, home office, laptop, and even meals. These deductions lower your taxable income. For example, if you earn $70,000 and deduct $20,000 in business expenses, you're only taxed on $50,000. Even if your side hustle earns just a few $100s a month, it opens the door to tax advantages. Just make sure you keep receipts and stay compliant. You can also set up an LLC or S-Corp to potentially save even more. With an S-Corp, you can pay yourself a reasonable salary and take additional profits as distributions, often taxed at a lower rate. Another benefit? Retirement contributions. As a business owner, you can contribute to SEP IRAs or solo 401ks, allowing you to save more and reduce taxable income. 2. Real estate depreciation. Real estate is a powerful wealth-building tool, and it comes with massive tax benefits. One of the biggest is depreciation. When you own a rental property, the IRS allows you to deduct the property's value over time, even while it's appreciating. This is called phantom loss. You can be making money from rental income, show a loss on paper, reducing or eliminating your tax bill. Advanced investors use cost segregation to speed up depreciation by breaking down the building into individual components. This front-loads deductions in the early years of ownership when you likely need it most. You can also deduct mortgage interest, property taxes, repairs, and more. If you're classified as a real estate professional by the IRS, you may be able to deduct even more against your active income. And don't forget about 1031 exchanges, a tool that lets you sell investment property and reinvest the gains into a new property without paying capital gains taxes. 3. Use a Roth IRA. Want to build wealth that's never taxed again? Open a Roth IRA. You contribute after-tax dollars, but your investments grow tax-free, and withdrawals in retirement are tax-free too. If you earn too much to contribute directly, use the backdoor Roth strategy. First, contribute to a traditional IRA, then convert it to a Roth IRA. It's legal and allowed by the IRS. The earlier you start, the more you benefit from compound growth, tax-free. For example, $6,000 invested yearly from age 25 to 60 at 8% could grow to over $1 million tax-free. And don't forget the Roth 401k. Many employers now offer this option, combining the higher contribution limits of a 401k with the tax-free growth of a Roth account. 4. Borrow, don't sell. Here's a secret strategy the ultra-wealthy use. They borrow against their assets instead of selling them. When you sell an asset like stock or real estate, you owe capital gains tax. But when you borrow against it, using it as collateral, that money isn't considered income and isn't taxed. Let's say you own $1 million in stocks. Rather than sell them and pay taxes, you take a low-interest loan against them. You get access to cash, the stocks continue to grow, and you owe no taxes. This method is called buy, borrow, die. You buy appreciating assets, borrow against them for cash, and when you pass away, your heirs inherit the assets at a stepped-up value, avoiding taxes altogether. This is how the rich live tax-free while still enjoying their wealth. With proper planning, you can do this too. 5. Tax loss harvesting. Sometimes losing money can actually save you money. This is called tax loss harvesting. If you sell investments that have gone down in value, you can use those losses to offset gains in other investments, or even up to $3,000 of regular income per year. Many investing robo-advisors offer automated tax loss harvesting. Betterment, Wealthfront, and others track your investments and execute loss harvesting trades automatically. You can reinvest the funds after 30 days to stay compliant with the wash sale rule. This allows you to maintain a similar portfolio while harvesting losses for tax purposes. It's especially powerful during volatile markets, and it works best when done consistently. Bonus tip: health savings accounts, HSAs. HSAs are a triple tax advantaged account. You contribute pre-tax, it grows tax-free, and withdrawals for medical expenses are also tax-free. That's 3 layers of tax savings, unmatched by any other account. If you're eligible for an HSA, it's one of the best tax shelters available. You can also invest your HSA funds and let them grow over time. Use other money to pay for current medical bills and let your HSA compound for future use. Final thoughts. Let's recap. You can legally reduce or eliminate your taxes by 1. Starting a business and using deductions. 2. Investing in real estate and taking depreciation. 3. Using Roth IRAs and Roth 401ks. 4. Borrowing against assets instead of selling them. 5. Harvesting investment losses. 6. Leveraging health savings accounts. These strategies aren't loopholes. They're built into the system. The wealthy don't cheat the tax code, they use it. Now you can too. If you found this helpful, hit the like button. Subscribe to Smart Money Makers for more tips like this. And comment tax-free if you want a full series diving into each strategy in detail. Thanks for watching.